Good afternoon. Thanks for joining us today. Today's topic, as you can see from the first slide, is conversion transactions of a limited liability company and non-limited liability companies. That has basically been this month's topic here at our firm. And what we've been focusing on each month is a specific topic within the Internal Revenue Code and how it impacts businesses and planning. So that's what you'll start to see from us now each month, is that our tax tip that you receive in your email will be on a subject. The broadcast, the webinar, this webinar will be on that same subject, and any other blogs that we put out throughout the month should be related to that subject as well. So hopefully that'll keep everyone focused as to some of the highlights for each month. So let's take a look now at the second slide. So as we go, many corporations that exist today were started as C corporations. Now, everyone keep in mind that when we talk about companies and we talk about what they are, these designations that we use, as you see here, we use the letter C. That came from Chapter C in the Internal Revenue Code. S corporations comes from Chapter S of the Internal Revenue Code. So that's why we designate these as C and S, and limited liability companies are a little bit different, but that's where they've come from. That's where they've started from, at least. So a C corporation, that's the quintessential double taxation that we always hear, that the company is taxed on its income, and if the owners draw any money out, they are taxed again on that draw, whether it's salary, whether it's a dividend, whatever it may be. They're taxed twice at the C corporation level. And we've come a long way on our technology with corporations since the 60s and 70s. It's now much easier to convert the status of those C corporations to other types of companies. And as we know, there are many businesses out there in the United States that are reconsidering their status. So if you look at your business and you're a C, or you're an S, or you're an LLC, or you're a partnership, and how do you know? Well, go to your tax return. Look up in the left-hand corner. If you are filing a company tax return as an 1120, you are a C corporation. If you are filing an 1120S, you are an S corporation. If you are filing a 1065, you are a partnership. If you are filing your business return on your personal return, you're probably filing a Schedule C and you're not incorporated. So keep that in mind as well as we continue on. So what's the biggest question that we get right now? It's the conversions from a C corporation to an S corporation. The default rule for any corporation formed is that you default to a C status. So if you ask your accountant or your attorney, or you file articles of incorporation on a company, you are a C corporation right off the bat. You have to file an S corp election, and then you become a subchapter S corporation. And what does that mean? That gives you flow through taxation. The company is not taxed on its income, but any profit that the company shows is taxed to the individual shareholder at their income tax rates. It's not always beneficial to be an S corporation. Think about it. If you're in a 30 to 40% tax bracket, and why do I say 40? I'm including state income tax in that. If you as an individual are in a high income tax bracket and your company is showing a profit between $0 and $50,000, you're being taxed at that high income tax rate if you're an S corporation. If you're a C corporation, that profit is taxed at 15%, up to $50,000 of profit. So don't just think because we're talking about conversion and we're talking about converting from a C to an S that you automatically want to make this conversion. And take a look at the last bullet point. Even though this was created, this S corporation was created in 1958, it did not become popular until the 1980s. I represent a lot of companies across the US. And if you've been formed prior to 1980, prior to 1990, really, most likely you're a C corporation. if you were formed after the 1990s, and if you're considered a small business in the United States, chances are you're going to be an S corporation. And then we can take a look at whether or not we want to have you convert. So converting from a C to an S, there's some restrictions. So an S corporation can only have 100 shareholders or less. An S corporation can be individuals only, can be shareholders. So if you want another company to be a shareholder of your company, in other words, you want to kind of create some layers to your company, you can't do this with an S corporation, but you can with a C. Why do we do that? Why do we create layers? It's liability protection. If one company is owned by another company, which is owned by another company, which is owned by an offshore company, whatever it may be, we are creating layers of liability protection. We're trying to make it harder to get to your individual assets that you may own. You cannot have a non-resident alien. And we deal with this a lot with foreign individuals within the company. You can only have one class of stock. Right now in today's economic climate, we're seeing a lot of variation of stock rights and stock voting rights and stock ownership rights and dividend rights and just different ways to subscribe stock in your company. But you can only have one class of stock in an S corporation. So even though you may want to convert from a C to an S, you may have to do some corporate restructuring before you can do that. And of course, we've already talked about the flow through taxation with S corporations. Let's move on to slide 5. What if we want to change from a subchapter S corporation to a C corporation? There's low risk for tax in this transaction, but this transaction does have the potential to be taxed. So if you think you're a sub S and you want to convert to a C, there is a possibility of taxation in that transaction, and you need to contact us or your tax professional to discuss that, to see what your scenario is. It generally happens, though, when you would make this conversion, when a company has more than 50 million in sales or revenue, and they're looking to potentially go public. So if you have a corporation that you think you may take public at some point in time, or your board of directors does, and you are a subchapter S, you do need to look at the possibility of converting to a C. And again, is there a tax effect to that transaction? But look, with a C corporation, there's no restrictions on ownership. All right, let's move on to slide 6. What if we're a partnership? We're filing a 1065 tax return, and we want to change to a corporation. We want to become a C Corp, an S Corp. We want to become something. Just know, the 2 points I want you to know, generally this is not taxable. Or if you're unincorporated and you want to go to a corporation, this is not a taxable event, because there's a special rule in the IRS code that says we can exchange assets, and in exchange for those assets, we get stock. So the partnership is giving its assets to the newly formed company, and in return, the partners are getting stock in the company. Take a look at slide 7. We've talked about corporations, but what about if we're going to go from a corporation to an LLC or to a partnership? This is a distribution of the corporation's assets. So if you're a tax professional or your advisor, or you're thinking of telling yourself, well, we're a company, but man, I really want to become a limited liability company. I've heard so much about limited liability companies. I'd like to change our company to this. Be careful. This can be a distribution. It can be taxable to you. It is possible to make a series LLC. This is a new format. You've heard me talk about it before if you've listened to any of my lectures. And if you are a current LLC and you want to change to a series LLC, it is also a possibility. We have to look at your state law to see what procedure they want you to go through. I'll give you an example. For the state of Illinois, it's simply a check the box. We simply go online, we print a form, we check a box, and we say we want our LLC to now become a series LLC. Illinois has made probably one thing in its entire hierarchy of corporate structures easy to do. Change from an LLC to a series LLC. So look, brief topics, that we're trying to get across to you. But in conclusion, look, conversion is now become easier than before. We're seeing more and more of it than we've seen before. Your choice of entity is not a one-size-fits-all approach. Do not think because you are an S corporation, oh, I'm getting the best tax benefit possible. No, you're not, especially if you're in a high income tax bracket. We like to do a tax analysis and make that determination. If you're not a limited liability company, should you consider becoming a limited liability company? Should you consider becoming a series limited liability company? You know, talk with somebody who's informed on these matters. One thing we always do here at the Center for Financial, Legal, and Tax Planning, we always offer free consultation. We take a look at your tax returns. We take a look at your financial statements. There's no charge for us to review those. We'll have at least a 1-hour conference with you, whether it's in person or whether it's on the phone or whether we video conference in. There's no charge to that conference either. We'll tell you what we're seeing and we'll tell you what our recommendations are. Talk to someone, whether it's us or someone else, who's informed on these matters. Thanks for listening. There's my contact information. My email is on there as well. Our website is www.taxplanning.com. Feel free to, we are also on Facebook. Thank you.